What's up everyone? Hope we're all well. Welcome back to another Sniper Sundays. This is a series where I go over all of my trades for the week before, as well as my market breakdown to predict what's going to happen within the week ahead. Now, I didn't quite do my Sniper Sundays last weekend. You'll be happy to know it's not because I'm lazy, it's because I'm working on so many projects for you guys. I wasn't really going to give a spoiler, but basically we've been doing a lot of research and development for our funded autopilot trading system, as well as our plug and play trading system. So I've been busy finding more pairs and more settings that this works on to make more spaces available for those that want autopilot trading systems on their funded accounts. So we found a few new settings. We're going to release them in batches rather than just a free-for-all. So do message me if you want to be on the waiting list for that next round of set files, because we're probably going to have about 10 settings that we can open up. So message me now if you want to reserve your spot. So with that being said, I've got 2 weeks worth of trades to show you guys, okay? So last week we showed you, 2 weeks ago we showed you the trades for that week, which was plus 7.64% if you were risking 1% per trade. The first episode we made 5.25%, again if you're risking 1% per trade. In this episode, without spoilers, we're going to go through one by one and show you exactly what happened within the VIP group, all of the trades that I call and all of the trades as they play out. So where we left off last week was this Euro USD position, which I'll show you on chart now. So within this trade, I will go ahead and break this down for you from the very beginning, show you how I came to my conclusion to place this trade and how it played out. So here we're at the Monday the 6th of Jan at 11 AM. Let's do Alt G, go to Monday the 6th of Jan at 11 AM, and we're going to break down this trade like we did for the VIP group, okay? So here's a trade on the 4-hour time frame. What we're looking at is, here was our higher time frame trend, like this, okay? Then what we had was on the daily time frame, price was trending between these highs and these lows, this triple bottom. What we saw was price broke out of this daily channel. You see there, price broke beneath those lows, like this. Had a little bit of support to come back into the trend, but then ultimately broke lower down here. Okay, so this was price breaking out of that trend for good. You can tell by the huge red candle there, okay? So once this was formed, it gave us a level which I call substructure, like this. So price came out and formed the first instance of substructure. The reason I don't refer to that as structure is because it's the very first glimpse of price out of a previous trend. So as you saw here, you would have also referred to this as substructure at the time, like this. But shortly afterwards, price came and reversed back inside the trend. So this wasn't real structure because it was still just coming back into this trend. So the reason I call it substructure is it hasn't really proven itself as a point of structure yet. This could just be a fake out like this was, okay? The way that this becomes structure is by having a breakout again. So now that this is broke out, this is what we refer to as break of substructure, or BOSS for short. After this break of substructure, this is where we're now looking to trade price further downwards, okay? But we don't want to just place a sell here, okay? Because, you know, that's just a crap level to sell from when price is low. If you're looking for a sell, you want to sell when price is high, okay? So you wait for that retracement. So from this retracement, there's a few ways that we determine where to sell price afterwards, okay? First of all, we have the Fibonacci tool, which you plot from the previous high to the previous low, down there, like that. Then you can analyze areas of inefficiency within the market. This is in the form of fair value gaps where you have a gap in price to the left and the right, where price hasn't quite recovered yet. Okay, so here you can see this was a fair value gap, just like that. There's also fair value gaps down here, okay, but they're just even too low down to sell from as well. So we want to look for fair value gaps between the 61.8 and the 78.6, okay, on the 1 hour and the 4 hour time frame. So here you can see that's a fair value gap. We've also got a order block up here like this. Put it on that candle body on the 4 hour, and that is an order block, okay. So these are two solid areas of inefficiency within the market that price might look to retrace up to, mitigate, and then reverse. So from this position, if I show you that, you can see that we entered from the 78.6 fib level, like that, okay? So because we had this order block up here, we knew that price was going to retrace all the way up here before reversing back down, just like that. So what we did is we placed our short order on that 78.6. We had price a couple of pips above that high, and we had our TPs aiming all the way down here to 61.8. Now, I said TPs, not TP, okay? There's more than one. So TP1, we put there at the last previous low, if we're looking for a sell. TP2 I plot at the 27.2 fib extension level. TP3 I plot down here at the 61.8 extension level. Okay, so what happened was from this break of substructure, price reversed up to our entry, price came back down to our TP1. Okay, it was at this level that we took half of our position out. Okay, so we closed half of this position at 3.52 risk to reward. Okay, that's what we saw last episode, this 3.52. Okay, what happened then is we set our stop loss level to our entry level. Okay, so what this means is that if price retraces all the way back up there, we close out of the position for a net gain of 0. Okay, so no win and no loss. This protects us from losses when prices already move so far in our direction that if something does happen in the markets that price reverses, we're now safe from losses. Okay, so you can see how price played out, and price did reverse back to our entry level instead of going further downwards. So what happened as a result is the second half of this position from last time, we hit break even, which we call BE. So the net change is 0 there, okay? We already cashed out 1.76% from this trade in the form of this TP1 being hit, just like that. And then the second half of the trade got closed out for break even, just like that, okay? So that covers our first trade. Second trade, let's clear that. Now we're looking at the pound US dollar, where we had a TP1 hit. Okay, so let me just find that one. If I scroll from my VIP group, we can see, apologies, I've just checked the group and it turns out we did have another break-even trade on Euro USD before that GU trade. Okay, so let me show you that one as well, just for the sake of it, so you can understand the analysis. Just because it was a break-even trade doesn't mean it wasn't a good one, and I'll fully explain what happened there. Okay, so this one was on January the 14th at around 10:30. Okay, so go here, Euro USD, and this was on the 1 minute time frame. Okay, so get that in there. Alt G 14th 10:30. Let's go. Okay, so here is the price on the Euro US dollar 1 minute on the Tuesday the 14th of Jan, just before 11 AM, which is when we took our trade. So what you can see is that price was making higher highs and higher lows to the upside. We then had a lower high, or a double top, if you want to call it a double top, followed by a break of structure here. Okay, so notice that. This is what we were looking at. This is the actual low, okay? From this high, low, high, low, high, low, high, low, this is the actual low before this high. So this is the area that we need to see break, okay? So here we plot our change of character, and you can see that price did try to break that low a few times, but it was just followed by wick rejections, showing support. But at this level here, where we had this close of price beneath, this was our change of character. From this change of character, we were looking to sell price to the downside, because this is basically our confirmation that price is no longer making higher highs and higher lows, but is actually going to start making a lower low. If we look at price like this, we can see that price is already starting to make lower highs, okay? So it's making lower highs and it's making equal lows. After this low was broken, you can see we had a double top within the wave, which gave us a liquidity level in the markets that price might look to take out. Again, we can plot the Fibonacci tool from the last significant high to that last significant low to give us areas in which price might look to reverse to in the markets. Because we've got this liquidity level at around the 71% fib, we're going to look to take a short from that 71% fib. Because we're on the 1 minute time frame, we want to have some confirmation candlesticks, and that's what we had here when we had this spinning top candle and this inverted hammer from that 61.8 fib. So that gave us a confirmation that we could safely sell at the 71% fib level. We put our stops a couple ticks above that high like that, and we put our TPs down here. Now when I'm on the intraday time frame, so anything like the 1 minute or the 5 minute, I only use these first two TP levels. Now what happened here was that price instantly reversed, then it reversed again into some drawdown, and then it came all the way back down and then back up, and price was really just moving sideways. Now this was a very high impact news day, as we had the CPI news release in the New York session. So after price just going sideways, up and down, I did decide to close this trade out at break even around about this mark here. However, if you look what happened, price did actually find resistance there and drop all the way down here. So if I did hold, it would have made about 3.22%. However, the move that caused that price was right before a CPI news day, as you can see by this volatile price here. So I decided it was better safe than sorry, better not to gamble right before high impact news. So I did just close out for a 0 net gain, as you can see here. And so I didn't take a loss, but I didn't win as well. So it was basically just no net change in the result. The next trade on the list then is pound US dollar, which was on the 1 minute time frame on around Jan the 15th. Okay, so let's go to that again. We'll go Alt G, Jan 15th, and this was around 20 past 10. Go half 10. Okay, so there we are. Plot that line. Go down to the 1 minute. Okay, so what we had here was price was using the EMA as resistance at first, then it broke above, started using the EMA as support afterwards. Okay, so after we saw this low and this high, which basically meant that price had used resistance, used the EMA as support multiple times, we took the fib from this low to this high up here. What that gave us was an area in which we were looking for price to come back down, use it as support once again, and bounce back to the upside. However, we had to be a little patient with this level, okay, because price didn't come back down straight away. It actually consolidated for quite some time. Now, we took this trade live during our live trading sessions. If you go to the live section of my YouTube channel, you can see all of my live videos. You can even watch them back after the date, and you'll see that I waited patiently and took this trade. So I knew that from this low to this high, with this EMA as support, I can still wait on this 71% level to give me a take profit. Okay, so I waited patiently, and I still stayed strong on having my entry here at this 71 level. And then I had my stops, a couple ticks beneath that low, and I actually had my TP3 all the way up here. Okay, so for this trade, since we've got a nice previous high to aim for, I had TP1 at this previous high, TP2 here, and TP3 here. As you can see from the trade, we only hit TP1 at this previous high, but we still made about 2.3 R. Okay, the actual trade on the day was 2.36 R. We took 50% of the position out there, so you can see we made 1.18%. Okay, and that's from seeing this high and this low, this high, and we knew that we'd get a next low at this 71% level. We waited patiently, we secured a pinpoint entry and a pinpoint exit from that trade. Again, after the TP1 level was hit, we put our stop loss to break even like this, and unfortunately price did reverse and stop us out at break even, but again we took half of our profits out at a TP1 and the rest we just closed out for zero. So this was a winning trade. The next trade on our list was actually our trade of the week, and this was a swing trade on the pound US dollar, and we hit TP1, TP2 and TP3. So let's go through that now. This is a trade that we hit. Okay, after calling this trade to the downside with some stack positions, we actually caught a re-entry afterwards, trading GU to the upside. Okay, so what we had here was price was in this local downtrend, which we spotted. This dashed line here is actually a liquidity level being swiped in the market. You can see that daily low there. That level got swiped, which you can see from those daily wicks. Zoom in on the 4 hour. You can see that this was the 4 hour downtrend that broke above after this liquidity sweep. We also had this support from this daily price range there. So this low, and this low, that got swiped, the liquidity got swiped. That caused this trend line to break above. Okay. That trend line broke above. After that, we had this substructure, which I've explained before. Price reversed, found support of the previous trend line, price reversed, broke above this substructure, making it a break of substructure boss. Okay, after this boss, what we're looking at is this low and this high, like that. I can add my TP3 level back on there. And here's the story, okay? So from this high, from this low to this high, which broke out of substructure, we were waiting on a reversal to trade price higher, okay? However, if you'll notice what happened there, from this low to this high, our entry level was originally supposed to be from this 78.6 here. Price came a whisker away from our entry and we didn't get tapped in. So this is where we originally wanted to enter. Price came so close but didn't actually tap us in, okay? So we were a little bit gutted when that happened, but you know, you just got to play on, okay? So after we had this initial break in price, we said, okay, let's try and play a reversal or a retracement from this move to the downside. So we adjusted our fib to this low, to this high, like that. And we waited for the 71% level to get hit, which it did. We kept our stops beneath this low. We had a little bit of drawdown, but we carried on. And funnily enough, we could have kept that same entry level and just stayed a little bit more patient and caught a much better entry with stops here and TPs all the way up there again. However, that didn't really matter because, you know, we still got tagged in for a 4.37 R trade. We took TP1 here, like that, TP2 there, like that, and TP3 finally here, all the way up there, okay? So, in total, taking 50% at TP1, 25% at TP2, and 25% at TP3, we're left with plus 2.98% from that trade, okay? Because we had half of this, a quarter of this, and a quarter of this, okay? So you can pause the video and add it up. So that was our GU swing trade, which won trade of the week. Next up, we have pound US dollar, which we had another TP1. Okay, so let's check that one out. Okay, right, I've just gone to check what that trade was, and your mind is going to be absolutely blown, okay? Because this trade was actually a short trade intraday during this drawdown, okay? So note that we've already entered here long. So we're already in a buy position playing on the fact that GU is going to go long. Okay, now watch what happens next. Right, so remember what happens next? Your mind's going to be blown. Well, I wasn't lying. Okay, so here we're intraday trading within the London session. What we notice is that price has made resistance from the EMA, resistance from the EMA, resistance from the EMA, resistance from the EMA. Okay, so at this point we're already looking for price to act as resistance from that EMA once again to the downside. Okay, however, we're in a bit of a tricky predicament because we're already long on this GU position. Okay, so this is during this downwards price. Okay, so we don't really want to go short because that kind of means that our long position is going to fail and hit stop loss. Okay, however, what we can do is place a short anyway, and this provides us with a hedge against our long position. What is a hedge? Well, it means if you've got a long position open and a short position open at the same time, in theory, one of them is going to lose and the other is going to win. But if you position yourself in a place where one of them is only going to lose a small amount and the other is going to win a bigger amount, and if the other one loses, you lose a small amount, and if the other one wins, you win a big amount. Okay, so you're going to see exactly what that means here. Okay, so from this, we have lower low, lower high, lower low, lower high, lower low, lower high, lower low. We expect lower high to push down to the downside. Okay, we took our fib from this last significant high to the last significant low, like this, and the level that we were looking for was our 71% fib after we had some initial rejection from that EMA. So we took a short position here, like this. Stops were a couple ticks, above that high, and we had TP1 and TP2 down here, just like that. Okay. Now, what happened is that price came all the way up here, whiskers away from our stop loss, but because we had our stop loss above that previous high, which didn't get broken, we stayed in the trade. Okay. Now, once price came all the way down here, very close to that TP1, we actually called out to manually close the trade at this level because it's so close to our TP1, and because we had this experience the day before where price came so close to our entry but didn't tag us in. Okay, so not being tagged in here basically gave us a little bit of foresight to say, let's just close our TPs here while we can, just in case the same thing that happened yesterday happens again. Okay, and you'll notice it's a very tiny difference. Okay, so rather than 2.38, you're closing out for like 2.35. Okay, very minuscule difference of around 0.03%. Okay, so we closed out our TP1 here instead. Luckily, we did have that foresight because price reversed all the way back and hit our stop loss at break-even level. So of course, after we took our TP1, we set our stops to break even just like that, and the rest of the position got cashed out for zero. Okay, so that was our second trade, which was pound US dollar TP1 hit 2.3R plus 1.15%. Now, I bet you're thinking, well, my mind's not that blown, you only made TP1. But wait for this, okay? So if I just show you all of that again, the trade that we placed, which was a short position, while we were also long on GU, okay? So we took TP there, and what happened is that price didn't actually go lower, so it didn't actually hit our stop loss on this position. What it actually did is reverse higher and hit our TP3 here. So not only did we make 4.37 risk to reward by going long on GU, we also made another 1.15% by going short and hedging against it during this drawdown, as you've just seen there. So in total from this trade, we actually made over 4% by going long and going short at the same time and calling the market pinpoint perfect from the downside all the way up to the upside. Okay, so yeah, there you go, mind blown. Next up, we've got Euro USD, which was another break-even trade. I know we've had a lot of TP1s and a lot of break-even trades. within the past 2 weeks, but it's been the Trump inauguration, so the markets have been moving a little bit different to normal. However, we've still managed to come out on top and make a fuck ton of money. So here's how we did it. So this next trade is on Euro US dollar, and it happened around 12:30 on January the 20th. So let's take a look at that. Okay, so here we are, Monday, January the 20th at about 12:30. What we saw during the London session was that price was making lower lows and lower highs, using the EMA as resistance. Price broke above, started making higher highs and higher lows, using the EMA as support. Okay, so this is exactly what we want for our London trade setup. What we saw at this point was the fact that price had made a higher high. Respecting the EMA, we're going to take our fib from this last significant low to our last significant high up there. And what we actually got was a trade from this level right here on the 71%. Reason being, we had this fair value gap form on the 5 minute, just like that. And we looked to place a trade from this 71% fib, just like that. Okay, we had our stops a couple ticks beneath that low, just like that. And we had our TPs, not all the way up there, but a bit more sensible back down here for TP1 and TP2. Okay, now what happened here? Okay, price reversed from the fair value gap, price reversed from the EMA, price reversed from the fib level, and came all the way up here. Once price had hit this previous high like this, we said set stops to break even. Reason being is you have the potential for a head and shoulders pattern to occur from there. Okay, so when this previous high got hit, we went stop loss to break even, just like that. And then if price reversed back to our entry, we'd get stopped out at break even for a zero net change, hence zero. Oh, spoiler. Hence zero, just like that. Okay, so price did reverse and we got stopped out at break even, which was, you know, a bit of a pity because price almost hit that TP1 level and we would have cashed out half. Oh, let me go back. And we would have cashed out half of this TP1, so about 1.15% again. However, didn't quite play out like that in reality, and it came all the way back down to our entry, which stopped us out at break even. Then look what happened afterwards, okay? Price did wick that low, so even if we didn't do that, it would have been a minus 1% anyway. But this was actually on a CPI news release day, so price was again a bit volatile. And if we were just a bit lucky, okay, in another world, would have maybe caught a huge play from that, which could have been like up to 26R, you know. If we decided to not use stop losses and not use take profits, that could have been a massive win. But that would have just been gambling, it would have just been pure luck, and that is not how we trade, okay? If you want to trade with success, you need a measured, systematic approach, which is exactly what I do. As I'm sure you can see, I follow my rules, I keep to my trading plan, and that's how you become successful in trading. So, unfortunately, this wasn't a 26x, this was actually a 0. And here I am trying to tell you that I'm a successful trader, okay? So that was a break-even trade. As you can see, we avoided our stop loss being hit by finding a suitable level to change our stop loss to break even, and we got out of a trade that didn't go our way without losing any money. Okay, so that's sound, proper risk management. Next trade on list, we have a pound US dollar position again, TP1 hit 2.37R, and we made 1.19% from that. So let's load that one up. Okay, so this was January the 21st at about 10 a.m. Okay, so let's load that up. So January 21st at about 10 a.m. Let's go there. Let's set a vertical line so we can see it. And we were looking at the 2 minute time frame here. Let's zoom in. Find our line again. Okay, perfect. We can see it already. Okay, so what happened here? Price was making lower lows. Sorry. Let's start again. Okay, price was making lower lows, lower highs, lower low, lower high, equal low, lower high. Okay, and this is reacting from that EMA, using it as resistance while it's making clear lower lows and lower highs. Okay, so what we did and our play was that we took our fib level from this last significant high down to this last significant low, just like that. This gave us levels in the market that we can look to enter from. Okay, so we waited for some confirmation candles, which were in the form of these wicks. So we waited for those wicks to present themselves, price retraced, and then we looked to catch a re-entry from this level right here. So our position looked like this. Took a short from that level, had our stop loss a couple ticks above that high, and our TP1 and 2 at these lows like this. Okay, lo and behold, we've got a 3.25R trade. We took our TP1 at this level like that, so price held a little bit of drawdown, reverse hit our TP1, we cashed out for 2.36R, set our stops to break even. Unfortunately, price did just miss our TP2, but then it reversed up and hit stop loss at break even. Okay, so like I said, TP1 hit 2.37R plus 1.19%. Next up, we've got another break even trade to analyze, which I will go over, because the point of this is to show you everything and be fully transparent. Hopefully you realize trading isn't just 100% wins. If you have smart risk management, you'll actually have a lot of break-even trades, which is where beginners would take losses, but with smart risk management, you can turn those into break-evens and just focus on your wins and then get out the market when it's gone against you instead of taking a loss. Okay, so next trade, I believe, was actually around the same time, same day, but just on EU instead. So we are looking at around 10:30 on Tuesday the 21st. So let's go to that. Alt G, Tuesday 21st, around 10:30, like that. Bosh. Alt V, so we can look. And this was on the 2-minute time frame again. Let's zoom in on that. Then what you can see here, okay, similar concept at the same time, is that price was making lower low, lower high, lower low, lower high, equal low, lower high, reacting from the EMA as resistance. Okay, so where we looked to take a trade was this accumulation of highs like this. We spotted that that was a possible liquidity level in the markets like that. So we were looking to take this lower high to this lower low, okay, wait for a suitable retracement to take out that liquidity, have an entry from the 71% fib, just like that. SL, couple ticks above the high. Don't know why my TP is going crazy there. Let's just do it like that. TP1, TP2. Now price originally reversed our way really nicely, came all the way back down here. Again, because price took out the last candle body lows like that, at this point we said set stops to break even. Price reversed, and guess what? Hit our stops at break even. Okay, so this was a break even trade, just like that. Next up, we had a loss, unfortunately, but you know, realistically, losses do happen in trades. And so far, it's the first actual loss of the whole video, and it feels like I've done about 10 trades. Okay, so let's take a look at this one. GU 23rd of January at about 9 AM. Okay, GU 23rd of January at about 9 AM, like that. Okay, so we'll go here, and we were looking on the 1 minute time frame. So let's find that on the 1 minute. Okay, so we're here. So we're looking at about 9 AM on the 1 minute time frame here. Okay, so let's take a look at what happened here. GU 23rd of Jan, 1 minute, and yeah, it was shortly after 9. So here we were looking at the 100 EMA on the 1 minute, like this. Okay, as you notice, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, all reversing from the EMA, which was previously used as support as well. Okay, so we've got lower low, lower high structure using the EMA as resistance. So what did we do here? Okay, we looked for a fib from the last significant high to the last significant low, like this. And we was waiting for price to retrace back up to one of our fib levels in line with the EMA support and reverse back to the downside. Now, unfortunately, this time it didn't happen. Okay, so we waited for rejections, which we had in the form of this tweezer top formation, this 1 minute candle being engulfed by this 1 minute candle, like this. So we waited for this re-entry, like this. This was our actual entry. Stops above that high, TPs in the usual spots. However, this time price just reversed and hit our stop loss. Okay, so we lost 1%, and that happens. Okay, so if you take a loss, understand that it's not because you're doing something wrong. Losses just happen in trading. It's not a case of you've done everything right and therefore the trade wins. You can do everything right and the trade loses. Okay, trading is a probability game, so it's not input equals output. You can still do everything right and lose. What matters is that when you win, you make more than when you lose. Okay, so when we're winning, and we're winning a lot more than we lose, the sum of all of that means that when we win more than when we lose. Okay, so let's say you have a 50% win rate. Okay, if you take 10 trades, you're going to win 5 of them and you're going to lose 5 of them. And let's say you have a average risk to reward ratio of about 3, and when you lose 1. Every 10 trades on average, you're going to win 5 trades and make 3% each. That's a total of 15%. And then the other 5 trades, you're going to lose every one of them, but you're only going to lose 1% each time. So after 10 trades, what you're left with is 15% minus 5%, and that's a total of 10% overall. With that system, all you need to do is keep trading, and you're going to win trades on average. Yeah, you're going to lose trades, you're going to win some trades. On average, you're making money. With that system, all you need to do is keep trading and stick into the system. Okay, so that's what we have here. Okay, this was a losing trade. Guess what? The next trade was a losing trade as well. 2 trades in a row that we lost. But guess what? We didn't bet the whole house on it. We've still got our kids and we've still got our wife. Okay, so we're not at a casino absolutely crying our eyeballs out because we've risked everything. We haven't. We've risked 1% per trade. Okay, get over it. Losses happen. We've got 2 in a row here. Okay, so this was again on GU. Same day, straight after, pretty much. Okay, so that was the first stop loss you just seen there. The second one occurred at about 11:30 up here. Okay, somewhere around here. So let's take a look at where that was. So price reversed on us, started making higher highs and higher lows, using that EMA as a point of support. Okay, so what we looked for is for price from this low to this high up here to reverse back down to our fib levels and keep pushing higher. So what did we do? Price came down, we had some candlestick confirmations here, placed a entry, stops just beneath that low, TPs in the usual spots, and then guess what happened? Price did go our way at first, didn't actually come to any sensible place to set stop loss to break even, so price just came down and hit our stop loss and we lost 1%. Okay, it happens, it's normal, get over it, stop being so scared of losses. Okay, they happen. So that was the second losing trade. And last but not least, we have our US dollar Swiss swing trade in which TP1 was hit. Okay, so let's go over that one. So if I load up my chart, I load up dollar Swiss like this on the 4 hour. Oh, let me clear. Ignore all of that. Okay, just ignore all of that. It's irrelevant. It's definitely not another trade that we're looking at placing. Okay, but here what happened. Let me show you this on a clear chart. Okay, show you on a clear chart. So we go US dollar Swiss, just like this. Okay, so on the daily, let's get rid of this EMA. On the daily, what you can see, these equal highs, and these equal lows like this. So at the moment, price is just teetering between these highs and these lows, moving sideways. Okay, this you have markets that go up, you have markets that go down, and you have markets that just move sideways. Okay, that's what's happening here. The market is just moving sideways from a daily perspective. So we can jump in and trade on the lower time frames, that's fine. It's just the daily's moving sideways. We want to watch out when price reaches this zone again, which it has done, because that might tell you, the price is going to move down, back down here. It doesn't have to, it's just an idea. To support that idea, we can look on the smaller time frames and plot where we've got trends a bit more local to our current time frame of reference. So here you've got a low, one touch, two touch, this is a trend line. Within that trend, we also have another trend up here. Okay, now remember, trends only trend until they don't, for lack of a better phrase. Okay, so here we've got higher highs and high lows. Price didn't find support at this level, it broke beneath. Okay, so do you remember what I told you at the start of the video? This is now a break of structure. Okay, let's bring that up to the top. So this is our initial break of structure. Okay, once price has broke out of this structure, the next low that it hits, we kind of have to refer to as substructure. Remember, because this could just be a fake out and price carries on back in the trend and you got tricked into thinking price was going to go lower, or it could reverse and come back down. So this is substructure right now. It's kind of like no man's land. So if you wait patiently enough, price will tell you what's going to happen. Is it going to go back in this trend, or is it actually going to use this trend as resistance like this and then reverse to the downside? I'm sure you're not blind. Maybe you are, and I'm sorry if you are. Didn't mean to offend you. But this being broken is actually a break of substructure now, or boss. So this price broke beneath. Okay. Now, what we initially waited for is from this high to this low, like this, to come up to a fib level and sell off. Okay. As you can see, if you are able visioned, or if you are blind and didn't get offended and you're still watching this, then thank you for staying. But price didn't actually come all the way up. So we were looking for a sell here originally, didn't happen, and we just bounced off the 61.8 level instead. Okay, so we didn't get a trade there. However, what we have now is I'll do it to that level, is a third break of structure. From this third break of structure, we can still catch another trade from this high to this low, like this. Okay, we had this fair value gap up here, which is a little bit more than a fair value gap, because it's actually a fair value gap to the upside, which now overlaps with a fair value gap to the downside. And there's a special name for that, and we call them balanced price ranges. When you've got one fair value gap that overlaps another fair value gap. And these are very, very key levels in the market that price will want to refill in. Okay, with that level, we could say that price will likely retrace all the way up to this 78.6 and get an entry from there instead of 71. So that's where we placed our sell. We had our stops a couple of pips above that high, and our TP1, TP2 and TP3, because it's a swing trade, all the way down here. Okay, now this is still an open trade that is still playing out just like this, and I'm pretty sure this is still going to go to the downside. However, remember we took TP1 at the previous low for about 3.22 risk to reward. We've cashed in 50% when price hit there, like that, and now we've got our stops to break even, so we literally can't lose. And what we've cashed out so far is about 1.59% so far. Okay, and we've still got another 50% running to hit TP2 there and TP3 there, okay? So I'm aware that I've given away a lot of valuable knowledge within this video for free, and it won't keep happening, okay? It's just because I'm a small influence trying to build up my community, okay? But overall, you can see from this past 2 weeks, we made about 6.1%, and I've just shown you there all of my wins, all of my losses, as we've called them out inside the VIP group, okay? So quite an active, this is a very active trade log from me. I don't normally trade this much, but we've had the Trump inauguration and there's been lots of movements within the markets that we've been able to capitalize from. So overall, we made 6.1%. Hopefully, this was a great display of a couple of my trading strategies, how I trade, risk management, all that sorts of stuff. I'm not trying to give away too much, but you know, sometimes you can't help it. So there you go, have it. This video is going to continue for all of my VIP members when I'm going to show you my forecast for the week ahead. But as far as the free video goes on YouTube, we're going to cut it right here, okay? If you are interested in the VIP group, it's available for one last week at the lifetime access price of £199. As I've mentioned to you, right now I'm giving away so much value for free, it is insane. And even the value that I'm selling, it's going for so cheap, you might as well snap it up, okay? From the 1st of February, that lifetime option is going, and we're going to replace it with a £365 yearly membership, which again is super cheap. It's £1 a day to invest in learning a high income skill that can pay you for the rest of your life, okay? So right now, it's £199 lifetime access. I would snap that up while you can. We also have a monthly membership for £50 a month, and that will continue. Feel free to join on that and then just pay the $365 a year when that changes next week on the 1st of Feb. But yeah, right now, snap it up while you can if you're interested. If not, we've also got a free signals and analysis group, which I just post one free trade a week. So the first trade that I take every single week, I'll give away for free inside that free group, so you can have a little bit of a taster of what it's all about and decide if you want to join the VIP group or not based on that, okay? But thank you for watching this Sniper Sundays. You can see in total now, first episode plus 5.25%, episode 2 7.64%, episode 3 6.09%, okay? So overall, we've made about 19% from this past 3 videos on Sniper Sundays, okay? And I've gave you all of these entries, all of these stop losses, and all of these take profits super transparently. If you've been following me, you'll know that I've actually passed my phase 1 of a 200k funded account this past week, and that is all documented here. You can see I made 13%, and I've got the actual trades to prove it on my funded account as well. So yeah, hopefully you appreciate the value and the transparency and the honesty and the full breakdowns in a space which is just full of complete wankers and absolute trash, where people pretend that they can trade so that they can sign you up to a broker and make some commission on you and stuff like that. That's not exactly how we do things here. Here inside the VIP signals and analysis, we'll give away the trading strategy so you can use it for yourself and make your own money, okay? So enough talking. Thank you for watching, and I'll see you next week or on Monday if you tune in for the live trading sessions, okay? So I'll see you then. Have a good one.